Developers are giving away gold bars when you buy a house. 50-year mortgages. Is this coming to Canada? Yes, all this and more with a good friend and mortgage broker, Mr. Dion Beg, right after this. Here we are, my friends, back with our favorite mortgage broker in all of the land, Mr. Dion Beg. How you doing, my man?
Great, Gary. How's things with you?
Things are good. We've got, I looked the other day and I started watching some sports out of the Toronto, and I think everyone have seen this. The Toronto Premier Soccer League had their championship game in under like a foot of snow. So I don't know what's going on in the Toronto market. Is it getting cold there or what?
I didn't know that. I didn't see that. Did they win?
It was, you know what? Here's the crazy part. They played the game, and like every time there was a stoppage and it went into extra time, all the subs, just to keep warm, were like shoveling the field. It was hilarious.
Wow, it was really that much. That's crazy. We're talking about BMO Field downtown.
Well, we're actually talking in Ottawa, to tell you the truth, but if I get my facts straight, because I'll get called out for sure. And then the coolest part, if you ever watch soccer, one of the famous types of shots or goals is a bicycle kick, where you jump up and you kick it backwards, land on your back. That was the winning goal, and without skipping a beat, I don't know if it was the announcer or somebody, instead of calling it a bicycle kick, they called it an icicle kick. Like, here we go. Here we go. Right. I love it.
Okay. Well done.
Yes, exactly it. Which is the segue into our talk today, and we're going to talk about many things. Is the market cooling off?
Real estate market?
Yeah, exactly. A cooling real estate market. 50-year amortizations. They're talking about it in the States. Could that even come here? Because we did have 40 years at one point, did we not?
We did.
So we're kind of there.
Long ago, not long ago in my life, maybe in many other people's lives, but it was, prior to 2008, 40-year amortizations were widely available. Yeah,
that's just it. And we're going to talk about a little gold today. Funny enough, on in a real estate podcast.
Well, yeah, it's interesting how that's connected.
Yeah, for sure. Okay, before we get all to that kind of stuff and how it affects our markets here in Canada, let's just talk quickly about the Toronto Real Estate Board, the market overview, because a lot of our listeners or watchers obviously are out of the Toronto area, and anyone can go get these stats. This is every month Toronto Real Estate Board puts out these stats, and I'm just going to scroll down here just to kind of make sure everyone's on the same page. And some of this information, if you've been playing along, Dion, is not new. It's following the trend, and you can see our year-over-year sales. So this October versus last year's October, Dion, we're down 9.5% number of sales.
And we've got to all remember that we're benchmarking of last year, which was a terrible year, meaning it's worse.
It's worse than it really, not that it ever has been, but that means those numbers are really low. And here's the other telling piece of it. Year-over-year average selling price is down 7.2%. So we went from a worse year previous to even a worse year today, as you just kind of elaborated on, which is, that's we want to make sure. I think buyers have that mindset now that, hey, there's an opportunity here. Sellers are still playing catch up to that new reality.
Yeah, I mean, it's always the case. Buyers are always wanting to pay less than the seller is willing to offer the market, the property market for.
Yeah.
But it looks like if there's a 7% reduction in average sale price, it means that there have been enough sellers who have basically reached breaking point, right? In fact, I'll give you an example. In fact, this morning I was speaking with a couple who purchased their property back in 2020. Yeah, so 5 years ago, 2020, and they paid $825 for their townhouse condo at Yonge and Eglinton. We went to appraise the property. They thought it was going to be worth $900, and when we got the appraisal, it came in at $780. So they were surprised. And again, when we looked at the sales, it's like these sales happened. They were surprised that those sales happened in their neighborhood at that price point. And when we had to guess, like, why did these sales happen? It's almost always because people have racked up all their credit cards. They can't refinance their house. These last couple of years have forced people into taking on extra credit. And if they cannot refinance, what do? They have to sell. And if they have to sell, then they don't negotiate as much as they would if they were in a position of power, and they just take whatever price they can get. And that leads to the numbers that you're seeing on the screen now.
Well, yeah, and let's kind of look at that, scrolling down a little bit. Total new listings, of course, is up. That's no surprise. Now, here's kind of helping to tell your story there. We're seeing days on market go from 43 to 50. So we're creeping up to 2 months worth of inventory, or it takes that amount of time to get your home sold. So if you're sitting there and you're not seeing offers, which means you're not seeing showings, you're getting a little antsy, and that price starts coming down, which it should, because, my friends, if you're not getting showings, your pricing could be off 6 to 8% from what the market feels that it should be at. And if you're not getting that, have a good, strong conversation with your realtor to make sure that you understand that. There's different stats that we can use, Dion, at least that's available to us in Toronto and Toronto Real Estate Board, to go view how many showings the average home is getting, and we can go view that. Let's scroll down to condos. People always get a kick out of when we talk about condos, and I'm just scrolling down the page here, so excuse me for that. Condo sales, here we go. This is interesting. We are up from this time last year, 2.5%, or about 100 or so, slightly more condos than we were last year. But if you look to the other side of the page, the average selling price, that's down 6.4%, Dion.
Yeah, and look, if you look at the most affordable type of real estate, it has been and always will be the condo market. I mean, they're a smaller property, therefore that's entry level. And I think what's happened there is that many potential first-time buyers, and I would say these sales, Gary, they're not investors buying. These are end users, okay? Nobody's buying a condo today as an investment based on the numbers and rents dropping and that type of thing. So the sales that are happening are almost always to end users. And now the end users are saying, okay, these property prices have dropped to a point where it makes sense. I can afford it, right? I can afford the monthly payment. So the volume of sales is up, in my opinion, because first-time home buyers are seeing a great entry point into the real estate market through condos that are now priced at affordable numbers on the monthly.
Yeah, fair points. Yeah. Do you see our total new listings is slightly down to where it was? We're still seeing our sales to new listings ratio. That's on average kind of the same. Our days on market is up from where it was last year. But if you remember, so 33 last year, 39 this year, less than our resale or our non-condo, any property that's not a condo. And these are always interesting stats. They come out about the 5th to the 8th of every month, depending on the month there. And anyone can go pull these stats, and it's always good to be in the know of what's going on. And you talked about, back to your clients talking about getting their appraisal that coming in less than what they thought it was. This is a good way to kind of keep on track of that. And definitely there's different websites out there where you can kind of keep track of sales, but always talk to a realtor or mortgage broker, because every sale has a story. You don't know the story behind the sale. And a good connected realtor will understand that of what's going on, because it could be a quick sale for financial reasons, or, what data doesn't tell us is, hey, that home had never been updated, and that's why it sold $100,000 less. Right. And just understanding the ins and outs of that. Okay, let's talk about gold, and why is gold having an effect on our real estate market, Dion?
So again, we've spoken about the fact that a lot of builders are having challenges selling their properties, right? So they have pre-sold a bunch of stuff, but many builders will keep back maybe 30% of their stock, oftentimes in the hopes that when the project's complete, they can actually sell that 30% of their stock on speculation, right? And having made an upside. The pendulum swung the other way over the last couple of years, and now we have a whole bunch of builders who are sitting on stock that they cannot sell, and they're desperately trying to figure out ways in which they can make their stock attractive. So yeah, Gary, why don't you jump in and explain what's going on here?
Well, as you can see in the headline, and Dion summarized it, desperate Ontario builders are literally giving away gold bars to lure home buyers. And Dion sent this to me this morning. What are you talking about? The value of gold is at an all-time high. I'll bring up those charts in just a second to kind of tie us in here. You can see here, this is a development that's local to, we'll call it, to the greater Toronto area, or more of that Golden Horseshoe out in Woodstock. And you can see the River and Sky. So if you're looking to get a property and gold, go talk to River and Sky, or talk to your favorite realtor, and we can help you out with that.
So what they're offering is a 500-gram gold bar, which in today's dollars is equivalent to $45,000. So they're basically, it's a $45,000 discount, right? But I think, this is a gimmick. Gold is on the up, real estate's on the down. So maybe in the marketing team's mind, they're saying, hey, let's associate our development with an asset which people can depend on, even though our asset, which is the real estate, is not one that people are very excited by right now.
Well, exactly. You can see an ounce of gold right now is trading at almost $5,900 Canadian. And I pulled up the 10-year chart here. I know it might be small for some of you. Back in 2020, it was trading just under $2,000. So it's more than doubled that price. It almost tripled.
Gary, we should have all sold our real estate back then and bought gold, is what you're saying. Is that what you're saying?
We might have missed that we might have missed that. However, in 2021, you remember how strong the real estate market was. But this is interesting. And I can tell you, I have family members that own gold and been buying gold and silver. You can see the price of silver as well. That's this chart right here. My wife works for a jeweler, and she's a local jeweler here, and people will come in with pieces of gold to trade and so forth, and they are blown away of what their 20-year-old, 30-year-old gold chain is right, yielding in price right now, because of obviously the price of gold.
As you can see, I've sold all of my gold chains already, Gary. They're gone.
I can tell. No more Mr. D or Mr. T. Love it. Back to the builders. Look for these types of enticements. This one, to me, apart from I don't know, and I haven't researched the valuation and the opportunity of that particular development. However, there's going to be some unique enticements and advertising. We call them gimmicks, the way to get you into the front door. But sometimes it might make a lot of sense, and other times it's literally just a gimmick.
Yeah, if I go back to that couple that I mentioned earlier, Gary, where we're trying to refinance their condo. Interestingly, the reason we're trying to refinance their condo is because they had a child a couple of years ago and they want to buy a house, but they want to keep the condo. So we're accessing equity from the condo to go off and buy a house. And as part of that conversation, they basically said that what they're going to do is look at the developments that are out there and see if they can go and negotiate with the builder to say, we are qualified buyers. We like your development. We don't like your price. This is the price we can pay. Are you willing? And when was the last time that you, as a buyer, could dictate to the builder what price you're ready to pay, right? So we may be entering a market where you, as the buyer who knows what they want, and in particular, you're not really buying it for investment, but you're buying it for end use, like this young family are, you may actually be in a really interesting window of time to exercise your power, your position of power financially here.
Yeah, these are good points. Good points. Okay, let's transition. Let's talk about. There's always news from south of the border, and usually it's
every day, every minute.
Next, and then every now and then there's one like, well, that is interesting. I don't know if it's going to have a direct effect, but people are now have their mind open. 50-year amortizations. We've seen this headline come out over the last week. Trump's 50-year mortgage would save about $119 a month while doubling the interest you pay over the long run. That's from UBS. That's what they estimate here. And this is right off of Yahoo Finance. There's lots of articles about it, and you've done some math, if you will.
Yes. Yes.
Yes, it will save you monthly. What does it look like on the long term? Talk to us about what this could look like if it's actually a thing.
Yeah, look, guys, just for context, in Canada right now, 30-year amortization is the most that you will get. We did have 40 years about 17, 18 years ago.
And sorry, I'm just going to jump in there. Those 40 years, that had to be CMHC approved.
Insured. Correct.
Excuse me. Yeah.
Yes. And yeah, actually, it went from 40, it went down to 35, it went down to 30, and it capped at 30, right? So we're at 30-year amortization now. And, you know, some people in Canada think, oh, that is too long. We should only be at 25 years. 30 years is too long. It means you're going to be in debt so long, you're going to be paying so much interest to the bank. We won't get into that argument. But the question now is, Trump has come forward and said, okay, we are going to put out the idea that we want to offer a 50-year amortization. And I'll put this now in the context of a $500,000 mortgage at an interest rate of 4.5%. Okay, so the math is right now on a 30-year AM, you would be paying $3,100 a month. If that amortization was stretched out to 50 years, that payment would drop to $2,250 a month, saving you $850 a month, which is about a 27% monthly cash flow saving. Okay. So the argument here is we need to make property more affordable. And Trump was trying to do this through pushing the Fed to drop interest rates. We all saw this. It was in the news. He was forever pushing them to drop, and the governor was saying, "No, that's not your place, Mr. President." And we only make moves when we see economic data, right? Anyway, the moves have been made, but not because of the president, but because of the economic data. I feel what's happened here is Mr. Trump believes that he wants to be the president of an ever-growing economy. He has said that the stock market is going to zoom, but also he wants real estate to zoom as well. And he doesn't really, in my opinion, care about, and not many presidents or prime ministers care beyond their elected term. So what would happen if this came into place is properties would become more affordable. People who are renters would become buyers. Property market activity would increase, and property prices would also increase. Okay. And all of that would happen within 3 years if this thing came into effect today. And yes, you would see a boom in real estate in the United States. Okay. Now, the problem is that in doing this 50-year AM, you're going to be in debt for 50 years, and you're effectively adding yet, I think it's almost the price of the property you're paying one more time in terms of that 50 years. Like, that's how much interest you would be paying if you went on this 50-year amortization. So it's one of those things that in the short term is super exciting. And in fact, you know what had happened? People who own property would be super happy because their values would go up. Real estate agents and mortgage brokers would be winning because the market activity would be there. But people wouldn't be building equity or wealth at the same rate that we have traditionally grown accustomed to. And there would be a fundamental shift in, the house as a wealth building tool, because it's only slightly better than renting at that point.
Yeah. And the part that I come back to is, yes, it's going to have that immediate surge, if you will, over the next, 2 to 3 years. However, that buyer today that gets that 50-year mortgage, it's probably unlikely, if we looked at like the financial modeling of that type of thing, that they're going to be selling that property in 5 years, because quite frankly, it'll be tough for them to see that equity growth so they can move it to a new home or a different home. So we would probably see a transition of less sales if we push that out 5 to 10 years than where we're at right now.
Exactly. And the short-term gain versus the long-term pain, it doesn't make sense. I don't know how much traction Mr. Trump's going to get, but he seems like a guy who often gets what he wants. And so I would say, as ridiculous as this sounds, I wouldn't say it's dead on arrival. We'll see what happens.
Yeah, it'll be interesting. Will it come to Canada? Kind of a rhetorical question, because quite frankly, we know, the Bank of Canada looks at their finances much differently than the United States, and we shouldn't have to, but we'll remind people, like, often other countries believe it or not, look to our system and how to copy and model after our system, because we are so, from that perspective, conservative on how we offer and lend and really navigate our financial future here in Canada, believe it or not. It may not feel like it, but that's we are kind of that leading country there, if you will.
I I agree with that. At the same time, banks are all about profitability. And if the United States moves to this path, I can tell you that the major banks in Canada will be pushing for that, just from a profitability perspective. More money for less work is what everybody wants, right?
Fair point. Fair point. Yeah. And just because, something is available doesn't mean that everyone's going to be taking it as well.
It doesn't mean you should do it just because it is available, right?
That's right. Exactly. It is interesting. We'll watch it, obviously, with interest and how it affects, the market here. And just like everything else with, the tariffs and things like that, it is having an effect of, some the local economies, let alone the big Canadian economy, but the local economies and so forth. Dion, we talked about different insurances, and we want to make sure we cover it. We're going to cover it next video, because our video is moving on here. But insuring your property is highly an important conversation to have with your mortgage broker and your insurance provider and your realtor, to make, because it all works together. We're going to talk about that next call. Remind us how to get a hold of you.
Yeah, kangamortgage.ca or Instagram at @DionBeg.
There you have it, my friends. That's Dion Beg. I'm Gary McGowan. We'll see you and the 50-year mortgages on the next call. Thanks. Talk to you soon. Bye for now.